Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into MicroCloud Hologram. This is all based on our research captured this morning, September 23rd, 2025, around 7:39 a.m. Eastern. So the big question, they've announced what sounds like a quantum leap? Is it real? Or maybe, just a clever illusion? Okay, let's try and unpack this story.
Yeah, and before we jump right into HOLO, it's worth remembering the sort of mood out there this morning. The broader market is, cautious. A bit indecisive, you could say. Futures are mixed, tech indices slightly down. There's this background worry about U.S. growth maybe slowing to stall speed, as some are calling it. Plus, you've got a lot of economic data coming out later, Fed speakers too, so volatility is definitely kind of the name of the game this week.
Okay, so against that shaky background, you get HOLO. They're a China-based company. They develop holographic tech, mainly for things like advanced driver assistance systems, ADAs, and these 3D digital twins. Then yesterday, boom, they dropped this bombshell announcement, a major breakthrough, they say, in quantum photonics, basically claiming a big step towards making their tech really work, really viable.
And the market certainly reacted.
Oh yeah, the stock surged, over 22% after hours? And there's talk of a planned $400 million investment backing it up.
Right. And this is where, our deep dive really starts digging in. Quantum photonics, in this context, it sounds super futuristic, but the promise is huge. It could fundamentally change how they generate and project these holograms. Think much lower latency, better depth perception stuff that's absolutely critical for making ADAS safe and effective. So, technically, a massive potential catalyst.
There's always a but, isn't there?
Well, yeah, the but here is the financial picture. It creates this huge chasm almost. Our research is showing these wildly different fair value estimates. It's quite something. Like, we see some models that are purely focused on that future growth, assuming this quantum tech actually delivers.
Right, the optimistic view.
Exactly. Those models suggest a fair value maybe as high as $13.88.
Okay, $13.88. But what if you look at it differently? What if that promise, doesn't quite pan out or takes ages?
Precisely. Then you look at other models. These ones focus on HOLO's current operations, their actual financials today. You look at their cash burn, their current revenue streams. And some of those models actually suggest a negative valuation.
Negative. Wow. So basically, the existing business isn't supporting itself right now.
That's what those models imply, yeah. As a going concern today, it might not be generating enough viable cash flow. And adding to the uncertainty, there are literally zero official analyst recommendations out there.
Zero, huh?
Zero. So it forces you as an investor into this almost binary choice. Are you betting on a, let's say, speculative, potentially amazing future, or are you valuing the company based on what's on the books right now?
So given that massive conflict, what's the crowd thinking? How's the sentiment looking?
Well, it's fascinating. Overall, if you look at the options market, it's actually perfectly neutral, a 1-to-1 put-to-call ratio.
Neutral. That seems odd, given the huge news and the stock surge.
It is odd, but then you dig deeper, and here's where it gets really interesting, maybe even a bit weird. The highest concentration of open interest, like where the big bets are being placed, is way, way down at the $D.50 strike price.
50 cents? Seriously?
Yeah.
That's incredibly low compared to where it's trading now, even pre-market.
Yeah.
What does that signal?
It's a really strange signal, right? It tells us there's some profound skepticism lurking beneath the surface. While you've got short-term traders maybe chasing this momentum upwards after the news.
Yeah, the FOMO crowd.
You've also got some potentially large, maybe longer-term players making these calculated bets that this whole thing could just collapse back down once the initial excitement wears off. Could be hedging, could just be deep cynicism about whether they can actually pull off this tech transformation.
Okay, and what about short interest? Is a squeeze possible here?
Well, the short interest is moderate. Our research shows it around 7.7%. Not insignificant, but not extreme either. And the days to cover is pretty low. That means it wouldn't take that long for shorts to buy back their shares if they needed to. So a dramatic short squeeze probably isn't the main driver you'd expect for a continued big run here.
Right. So despite that underlying skepticism shown in the options, the technical charts must look completely different after that news.
Oh, absolutely. It acted like a defibrillator, basically. The long-term trend before this was frankly brutally bearish, just down, down, down. But this news, it caused a violent reversal in the short-term trend. Very strong upward movement now.
And are you seeing money actually follow that move?
Yes. Clear signs of accumulation, real money flowing in, and momentum indicators. They are firmly in bullish territory. It signals strong, sustained upward pressure, at least for now. But, and this is important, you have to understand this high momentum comes hand in hand with a dramatic expansion in volatility.
Right. Big moves up often mean the potential for big moves down, too. It's not a smooth ride.
Exactly. This isn't a slow, steady climb. It's explosive, which carries its own risks. So, tying all this together, the tech potential, the financial questions, the market reaction, our overall research lands on a cautiously bullish outlook.
Cautiously bullish. Okay, so for you listening, the key risks really boil down to, well, is this real substance or just hype?
That's number one. Then there's the shaky underlying financial health we talked about. Can it actually support this kind of valuation leap? And finally, don't forget that slightly nervous broader market backdrop we mentioned at the start.
Right, so caution is definitely warranted. What are the key levels people should watch then to gauge if this rally has real legs or if it's fading?
Okay, crucial levels here. For the bulls, for this upward move to continue convincingly, they really need to break and hold above the pre-market high. Our research tagged that at $7.36. Getting above and staying above that level is key confirmation.
And if it can't hold $7.36,
failure there would suggest the initial buying frenzy is over, and selling pressure could quickly return. On the flip side, the critical invalidation level, the point where you'd say this news-driven rally has likely failed, is a definitive break back below the $5 mark.
$5. So below that, the momentum's gone, and maybe those middle $1.50 option bets start looking smarter.
That would certainly validate that deep skepticism, yes. A break below $5 would tell us the excitement couldn't overcome the underlying financial questions.
Okay, so MicroCloud Hologram has definitely signaled its quantum ambitions, made its leap into the headlines. Now, the real question is whether the stock can actually stick the landing and bridge that gap between speculative science and today's financial reality. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.